Welcome to Cat Eye US Stock. We watch markets with calm, focus, and sharp instincts. Monday, May 4th, 2026, Wall Street tried to go nowhere. And early on, it kind of did. But by the close, we got a risk-off whiplash session. Quiet in the index, but noisy underneath. The theme was simple: narrow leadership and rotations. A few big names held the tape together, while a lot of the market just bled. Zoom into the S&P 500 heat map, and the story tightens. The board was mixed to red. It didn't feel like a clean sell-off, just churn with a downward bias. Leadership was totally fractured. Some megacaps acted as stabilizers, but others dragged. Meanwhile, a few single stocks lit up bright green or red, pulling all the focus away from the broader weakness. So where did the money actually go? Away from banks and industrials, and straight into defensive pockets. Energy caught steady inflows. Big pharma and healthcare stayed green. Over on the growth side, it wasn't a blanket bid. Semis looked messy. But traders still paid up for very specific AI narratives, names that traded like their own little mini-index today. Put it together, and you get the tension of the day. The index itself didn't look catastrophic, mostly because a few big supports kept it from breaking. But participation thinned out, cyclicals leaked, and the Dow's heavier downside made the risk message really hard to ignore. We were playing two games at once: defensive rotation underneath, and stock picking at the top. The tone wasn't panic, it was hesitation and selective risk-taking. As for chatter, we didn't have a specific verified rumor list today. But what really stood out? How fast attention snapped to crypto-adjacent momentum? Big single-name moves pulled all the focus. Just keep the framing clean here. Momentum narratives like this absolutely drive trading behavior. But they are not the same as confirmed fundamentals. Micron was the cleanest outlier on the board, up over 6%. The catalyst? The AI memory and HBM demand narrative, with bullish commentary pushing it higher, and the contrast is what matters here. Micron ripped while a lot of other semis struggled. That is a textbook dispersion day. Pure stock pricker leadership, not sector beta. AMD was the other side of that coin, down over 5%, dragged by risk-off pressure and weakness from its semiconductor peers. With Micron ripping at the exact same time, AMD became a high-beta AI stress test. It proves the AI tape is bifurcated, and dispersion risk is very real when leadership narrows this hard. Amazon was one of the clearer megacap supports today, finishing up nearly 1.5%. In a session where breadth was fading fast. That kind of green print matters. Why? Because it holds the index together. Amazon stepped up as leadership right when cyclicals and other parts of the market started leaking. Apple, on the other hand, was a drag down just over 1%. No major headline required here. In this kind of tape, it's all about the gravity. When Apple is red, the index needs other generals to do the heavy lifting. And that just fed the broader vibe today. Megacap leadership wasn't unified, it was totally fractured. Goldman Sachs dropped over 2%, and it mattered way beyond just the ticker. Financials were weak all day, and Goldman is the bellwether for that entire complex. It fed directly into the Dow's underperformance. The message? The market was absolutely not rewarding financial plumbing or cyclical exposure today. And then, there was Circle, up an explosive 20%. This was a crypto-linked momentum play, and it stood out precisely because the rest of the tape looked so muted. Circle became a pure sentiment proxy, yanking trader attention right into crypto-adjacent risk, even as broader equities played it safe. Looking ahead, the setup is about positioning, not prediction. The next high-impact window hits next week: CPI on Tuesday, May 12th, PPI on Wednesday, and retail sales and claims on Thursday. So, the near-term tell is simple. Do we keep getting megacap masking with weak breadth, or does the risk-off vibe spread? Keep your eyes on financials and industrials versus energy and healthcare. That's where the rotation signal is flashing bright. So, that's the day. Contained headlines, weaker participation, and a market that completely compartmentalized risk. Defensives caught flows and select growth stories still worked. But the big message? Dispersion and narrow leadership. Going into the next session, watch whether breadth stabilizes or if this quiet leakage turns into a bleed the index just can't mask. Thank you for watching Cat Eye US Stock. Stay curious, stay calm, and we'll see you next time.